Welcome to the show. Today we're going to talk about gold and price manipulation, and specifically, how do they manipulate the price of gold? You might have heard that happens, but you may have wondered, how does it actually work? I'm going to break it down for you today. Hello, welcome to the show. Today we are going to talk about how the price of gold is manipulated. We're going to dig into the weeds a little bit and explain literally how that works, because it's kind of a neat but disturbing process. All right, let me share my screen with you. Okay, so you might have heard this. I'd heard it for years before I ever kind of took the time to learn how it works. But, the idea is that gold is seen as a counterbalance to the US dollar. So if people are extremely confident in the dollar, the price of gold goes down. If people are less confident in the dollar, then the price of gold goes up. So kind of along those lines, if people started to see the price of gold go up, they might see it as an indicator that the dollar is losing its value or losing its strength. So the people who manage the dollar have a vested interest in making sure that the dollar is considered very good currency. So this is the thesis as to why the price of gold is suppressed. It's to protect the dollar. And especially during a time of financial turmoil, like maybe after the 2009 crisis, or even this year in 2022 when we're experiencing inflation, if the price of gold were naturally allowed to do its own thing and have what they call free price discovery, and the price of gold shot up, it could potentially cause problems for people who have a lot of dollars. So there is a motive here to manipulate the price of gold. But it's not as simple as it sounds, because we live in this sort of world where there's buyers and sellers, and whatever buyers are willing to pay, sellers, whatever sellers are willing to sell at and buyers are willing to pay, that kind of naturally kind of creates a market price. Well, gold has kind of an interesting thing that most other things don't have, and that central banks own gold, and they are allowed to lease out their gold to other people. Let's just use a bank, for example. They're able to lend their gold to a bank who can do things with it. So I'm going to just pick on JP Morgan because I've gotten in trouble for gold manipulation, just to illustrate how this works. So you have a central bank, and they lend gold to JP Morgan. And JP Morgan takes that gold, and they want to make money with it. So what they do is they sell the gold, take the money that they sold the gold for, invest it in something. Maybe they go buy a bond or whatever. And they get interest from the bond. And then when it's over, they take the money, take out the profit, put the profit aside, the original money that they got from selling the gold, and they buy the gold back, and they return the gold back to the central bank. So then they essentially take the profit, and now that's how they made money. Sounds good, right? But here's where it gets tricky. The bank doesn't actually sell JP Morgan the actual gold. Gold is heavy. Let's say you bought $1 million worth. Nobody went down to the vault for the central bank and picked up the physical gold. What they were given was like a piece of paper. This piece of paper is like an IOU that I'm selling you $1 million worth of my gold. You can take this paper and now go and do whatever you want with it, like sell it or whatever. This is called the paper gold market. And this is where this price manipulation becomes possible, is that the central bank can issue more pieces of paper than there is actual gold, because there's no tracking number that says this is for bars of gold 1, 2, 3. It's just that this is for $1 million worth of gold, and we don't really know how much gold the central bank has, and so they can issue as many of these pieces of paper as they want. Kind of like a fractional reserve banking idea, if you're familiar with that concept. They can lever it up, they say. They can sell as many of these pieces of paper as they want. So I could potentially, as JP Morgan, go and buy a whole lot of these at once. more than is available, because other banks will have borrowed some as well. And because nobody's ever actually taking the physical gold, it doesn't really become a problem. And so what the bank does then is they then go to an exchange, and there's two different major exchanges, one in London called the LBMS and one in the US called COMEX. And these are both big markets, and I think most of this price stuff actually happens in London, but don't quote me on that. So I'm JP Morgan, and I take my paper gold and I go there, and I've bought a lot of these, and I can do what are called naked shorts. So a short is when you place a bet that the value of something is going to go down. And you're not allowed to do naked shorts, because a naked short is when you sell an asset and you don't actually have the underlying thing. Like, I don't actually own the gold. So a short is when I agree to buy and sell as it's going down. I'm going to make a profit on the price difference. And what happens is that if the way a lot of these markets work is people will have automatic rules programmed in. So if I'm a gold trader, I might program into my exchange. Let's say the price of gold is $1,500. I might have a rule programmed in that if it goes down to $1,400, I want to sell automatically. These are stop losses. These help people from dealing with major losses. So a lot of traders have these stops programmed in. So if JP Morgan comes along with their paper gold and they start shorting and the price goes down, it creates this like trigger effect. And all these programmed in stops automatically kick in at specific times to further this downfall. So you only need a little bit of kindling to get this fire going. Because once it gets going, then it sort of, people panic. They see the price of gold is tanking and everybody runs in and tries to sell. And that's kind of how this is manipulated. JP Morgan has gotten in trouble for it. I don't want to say they're the only ones. But this is a way they can do it. It's through using shorts that end up triggering off other sell orders. And this helps keep the price. Like if the price of gold for its own thing just rise above, let's say, $2,000 an ounce, that would create anxiety that maybe the dollar isn't as strong as we want because people are moving their money into gold. So they come in, they short, start some shorts, sets off these triggers, the price of gold falls, and it helps keep the price below its natural value so that the dollar's reputation and perceived value of the dollar are both protected. So that's kind of how it works. My understanding is it kind of works a little bit similarly for silver. I haven't dug into the silver market as well, but I have been told on multiple occasions that the silver market is also heavily manipulated. Again, primarily the metals markets are seen as a hedge against the fiat currencies. So if the price of those goes up a lot, then it indicates a lack of confidence in paper currencies. So my point about this is it would be pretty cool one day in our lifetime if this system of manipulation went away, then it wouldn't be as possible, but easy to do this. And I'll put a link to my blog post in the comments, but some legislation was passed that's referred to as Basel III that makes it impossible or difficult for this type of thing to continue. And Basel III might be implemented in the US in January of 2023 per something that Michael Barr, who's a member of the US Fed, has indicated. And what that would mean is that it's possible, kind of cool if it were true, that after January of 2023, this system that the US banks are using won't be allowed anymore, which would mean that they can't manipulate the price of gold anymore, which could potentially allow gold to rediscover its natural price, which is likely higher than where it is now because it's suppressed. So that would be pretty neat to see in our lifetime, which might actually be soon, what the natural actual price of gold is when it is not being manipulated using this method. So there's a quick explanation of how the gold price is manipulated using paper gold and a process of naked shorts. and we might see this system end in a couple months. So this video may not age well. If you end up watching it in 2023, we'll see if the Basel III rules were actually implemented and if it changed it. But for now, this is how they do it. So check out the description for some more links about this topic if you're interested in some more detail. And feel free to check out my newsletter and membership called 2 Steps Ahead, where we dig deep into a lot of topics around blockchain, digital assets, and the future of money. All right, we'll see you in the next video.